So, I've been thinking a lot about the future. Not just the next smartphone or the next OS update, but the fundamental shifts in how we interact with the world. And right at the center of that is finance. The way we pay, save, invest. It's all being rebuilt from the ground up by technology. We're talking about fintech and digital growth, and specifically, the key trends that are going to define the landscape for businesses in 2025 and 2026. This isn't just about a new app or a cool feature, it's a paradigm shift. Staying ahead of the curve in this space isn't just an advantage anymore. It's basically a requirement for survival. The pace of change is just relentless. What seemed futuristic 5 years ago is now table stakes, and what's coming next is set to be even more transformative. For businesses, understanding these trends means the difference between leading the pack and being left behind. It's about seeing where the puck is going, not just where it is right now. And trust me, the puck is moving faster than ever. In this video, we're going to break it all down. We'll go deep into 5 key areas that I believe will have the biggest impact. We'll look at the tech, the implications, and what it means for you, whether you're running a business, building a product, or just genuinely curious about where your money is headed. It's a complex topic, but my goal is to make it clean, clear, and give you the insights you need to navigate what's next. So let's get into it. All right, first up, let's talk about artificial intelligence. AI is one of those terms that gets thrown around a lot, sometimes to the point where it loses its meaning. But in finance, its impact is incredibly real, and it's getting deeper. We're moving way beyond simple chatbots. The new wave of AI in fintech is about hyper-personalization and predictive power. Think about financial services that don't just react to your requests, but anticipate your needs. Your banking app could analyze your spending habits and proactively suggest a better savings plan or flag a potential overspend before it even happens. It's about creating a truly one-to-one financial relationship, but at a massive scale. Then there's the security side of things, which is just a huge piece of the puzzle. Fraud detection has been using AI for a while, but the models are getting exponentially smarter. They can now analyze thousands of data points in real time. Your location, your typical transaction size, the time of day, to build a unique profile of your financial behavior. Anything that deviates from that pattern gets flagged instantly. This isn't just about blocking a stolen card anymore, it's about identifying sophisticated phishing schemes and synthetic identity fraud before they can do any real damage. It's a constant cat and mouse game, and AI is the best tool we have to stay ahead. And finally, this all culminates in the creation of smarter, more accessible financial products. AI algorithms can assess risk with a level of nuance that was impossible before, which could open up lending and insurance to people who were previously underserved. It can help build investment portfolios that are perfectly tailored to an individual's risk tolerance and ethical considerations. The end game here is a financial ecosystem that is not only more efficient and secure, but also more inclusive and intelligent. It's not just a back-end tool. AI is becoming the core intelligence of the entire financial services industry. So the next big trend is something that's designed to be invisible. It's called embedded finance. And the whole idea is to weave financial services so seamlessly into non-financial platforms that you barely even notice they're there. Think about the last time you took an Uber. You didn't pull out a credit card or log into a payment portal at the end of the ride, right? You just got out of the car. The payment was embedded directly into the experience. That's the principle, and it's expanding everywhere. It's about bringing the bank to the customer right at the point of need, instead of making the customer go to the bank. This is a fundamental shift in distribution. For decades, if you wanted a loan, you went to a lender. If you wanted insurance, you went to an insurer. Embedded finance flips that script. Now, you can buy a new laptop from an e-commerce site and be offered an installment plan right on the product page, processed in seconds. You can book a vacation and get travel insurance as a simple checkbox during checkout. These financial products become features of another product or service, which dramatically reduces friction for the user and creates new revenue streams for the host platform. It's a win-win. The technology that makes this all possible is APIs, application programming interfaces. These are the digital handshakes that allow a non-financial company, like a retailer or a software platform, to securely plug into a financial provider's infrastructure. This banking-as-a-service model means companies don't need to build a whole bank from scratch to offer financial products. They can just integrate the services they need, whether it's payments, lending, or investments. This is going to continue to blur the lines between industries, making every company a potential fintech company. Okay, let's get into a topic that's surrounded by a lot of hype and, honestly, a lot of confusion: digital currencies. And I'm not just talking about the crypto you see on the news. The conversation is getting much bigger and, well, much more official. We're seeing a clear trend towards the mainstream adoption of digital forms of money, and this has huge implications for how transactions work globally. For businesses, this could mean faster, cheaper, and more transparent cross-border payments, cutting out a lot of the intermediaries that slow things down and add fees in the traditional correspondent banking system. A huge part of this story is the rise of central bank digital currencies, or CBDCs. This is a pretty big deal. We're talking about governments, the US Fed, the European Central Bank, the People's Bank of China, actively researching and developing official digital versions of their own currencies. This isn't a replacement for cash, but a digital equivalent that lives on a government-backed ledger. The potential impact is massive, from enabling more efficient distribution of government aid to providing a new, highly secure foundation for the private sector to build innovative financial services on top of. So what does this mean for the future? It means we're heading towards a hybrid system where traditional money, cryptocurrencies like Bitcoin and Ethereum, stablecoins pegged to fiat currencies, and government-issued CBDCs all coexist. The challenge and the opportunity for businesses will be navigating this new, more complex monetary landscape. Which currencies do you accept? How do you manage the volatility? The companies that build the infrastructure, the wallets, the exchanges, the payment processors, to make interacting with these different forms of digital value seamless and secure are going to be the big winners in the coming years. Next up is a trend that's all about control and collaboration: open banking. At its core, the idea is pretty simple. You should have control over your own financial data, and you should be able to securely share it with third-party applications to get better services. For a long time, your financial data was effectively locked inside your bank's vault. Open banking uses secure APIs to give you a key. It lets you grant permission for accredited fintech apps to access your transaction history or account balances without ever sharing your login credentials. It's a game changer for competition and innovation. This creates what's known as an API ecosystem. Instead of one bank trying to build every single feature its customers might want, it can focus on its core services and allow a whole ecosystem of specialized apps to plug into its platform. For example, you could use a single budgeting app that pulls in data from your checking account at one bank, your credit card from another, and your mortgage from a third, giving you a complete, unified view of your finances. This forces banks to compete on the quality of their service and their APIs, not just on keeping customers locked in. The implications for businesses are huge. This level of data sharing allows for the creation of incredibly sophisticated and personalized products. A lender could get a much more accurate picture of an applicant's financial health, potentially offering better rates. A wealth management app could analyze your spending across all accounts to give you smarter investment advice. It fosters a more dynamic and customer-centric financial market where the best ideas can win. The future of finance isn't a walled garden. It's an open, interconnected network where data flows securely to create better experiences for everyone. Finally, let's talk about a trend that's less about the tech and more about the sustainable and green finance. There's a growing awareness, especially among younger generations, that where you put your money matters. It's not just about getting the highest return. It's about ensuring that your investments and financial choices align with your values. This has led to a surge in demand for financial products that support environmental sustainability and positive social impact. It's about using capital as a tool for change, and the industry is responding in a big way. We're seeing the rise of everything from green bonds that fund renewable energy projects to investment funds that exclusively screen for companies with strong ESG, environmental, social, and governance records. ESG has become a critical framework for investors and companies alike. It's a way to measure a company's performance on non-financial factors, how it manages its carbon footprint, how it treats its employees, the diversity of its board, and the transparency of its operations. Good ESG performance is increasingly seen as a proxy for good long-term management and lower risk. For businesses, this trend is twofold. First, there's the opportunity to create and market financial products specifically for this conscious consumer base. But more importantly, it means that every business is now being evaluated through an ESG lens. Your company's sustainability practices, your supply chain ethics, your governance, these are no longer just PR concerns. They are becoming material factors that can affect your ability to attract investment, secure loans, and win customers. In the financial landscape of 2025 and beyond, being a good corporate citizen isn't just the right thing to do. It's becoming a financial imperative. So, that's a look at 5 massive trends shaping the future of finance. AI-driven services, money embedded in everything, the rise of digital currencies, open data ecosystems, and the push for sustainability. Each one of these is a huge topic on its own, but the real story is how they connect and build on each other. AI needs the data from open banking to be effective. Embedded finance relies on robust APIs. Digital currencies create new rails for all these services to run on. It's all part of one big, interconnected evolution. For any business operating today, adapting to this new reality isn't optional. The expectations of consumers are being reshaped by these technologies. They want seamless, personalized, intelligent, and value-aligned financial experiences. The companies that understand this and build their strategies around these trends are the ones that will not only survive but thrive in 2025 and 2026. It's about being agile, forward-thinking, and willing to rethink old models. The pace isn't going to slow down, so the time to start planning and adapting is right now. Ultimately, the goal of all this tech should be to create a financial system that works better for more people. A system that's more accessible, more efficient, more secure, and more aligned with the future we want to build. It's an exciting and, honestly, a pretty challenging time, but full of opportunity. So, stay informed, stay curious, and keep innovating. There's a lot to build. Thanks for watching, and I'll catch you in the next one.